Hello and welcome. My name is Deji Nehan. I'm a mortgage advisor and financial planner. Welcome. If this is the first video you've seen, I'd like to remind us that this is a series of videos where I have dedicated to talking about roadmap to mortgage success, how to secure your dream home. So you might be worth looking at the initial video to gain some understanding of what I've discussed before. But just to quickly say, in the first one, I talk about the passport, the gateway to getting a mortgage, which is your credit report. And I give us a bonus for us to be able to assess that. The second thing I talked about is making sure we are ready for understanding the location we want, the checklist of what we want in a property, what we want in a location. We already have that mapped out. We've discussed it. We've visited one or two options just for us to be able to nail it to what exactly we want. Then the third one, I talked about a very important aspect of your mortgage, which is your deposit. So I gave different options on how you can get your mortgage. I gave two tips that a lot of people would not be aware of, and that it might be worth watching that video for you to get hold of those tips. Today we'll be talking about another fundamental thing about your mortgage, which without it you can't actually get a mortgage. That is your affordability. In simple terms, it means to you your income, because your mortgage is something that you would pay over a long time. Most people would have their mortgage for over 25 years. And the only way lenders could be satisfied that you will be able to pay your mortgage is to make sure to know how much income you are bringing in. And one thing they would always want to ask is there anything in the future that would change that? So they want to ask that question for them to be able to factor that in. It could mean that maybe you're retiring, and that would be factored in to know that is this going to be affordable to you over a long time. So affordability, it's basically how much income you are bringing in. Back in the days, it used to be a simple calculation where you can gauge, although we still use that now just as a gauge, but I'll tell you that's not 100% correct. It's not near correct at all. What you could gauge is the fact that, let's keep it simple. Let's say you are earning an income of maybe 30K a year, and what lenders would do is to do a 4.5 multiple of that. So they would times your 30K income times 1.5, and that would be a ballpark figure of how much you can borrow. So that's quite an important thing. Your income level would definitely affect how much you can actually borrow. So it will be a 4.5. That you can use as well. That's a first step for you to think. Just use that as a guideline. But I'm going to warn us that that is not near accurate. The other things really lenders want to see is how much income you're bringing in, but more importantly, how much expenses do you have going out. And that could be committed expenses or could be basic expenses. Committed expenses are things that is mandatory for you to pay monthly, like your loan, your credit card, your mortgage. If you have a mortgage, those are committed expenses. So they want to know how much do you have left, which is called your discretionary income. And that will be able to help them to understand the fact that you might be able to sustain that over a long time. What that means is if you have no discretionary income, it could mean that you have no savings, you have no emergency funds set aside. So that's quite an important thing. One other key thing that affects your amount you can borrow, that affects your affordability, is if you have, like I said, committed expenses. So maybe you have a loan or you have a credit card. That would mean there is some amount of money going out on a monthly basis. Lenders will factor that in and put that into consideration on your affordability. So it's quite important to prepare ahead of time. If you have credit card that you can clear out, that would put you in a better position. And one other thing that would do is it would make sure that your credit history it's more favorable, because your credit score is likely to improve if you don't have a high level of debt to income ratio. So a lot of people can't get mortgage based on just that. They might have a big income coming in, but they have debt in the background, and the lenders will want to see their debt to income ratio. How much debt do you have at the background and how much income is coming in? Obviously factoring in the fact that you are taking a new mortgage, and that would be there would be a cost attached to that. And let's not forget, I'll talk about that in a different part of this series. Mortgages is not the only thing that you incur, either before, while buying the property, or after buying the property. So people need to bear in mind when they think about the affordability, to know that there are other costs that they need to prepare for. One tip I always give, and that's a bonus tip for today. You can get that online, or you can send me one, or look at the bottom of my video and you can see that it is a tool that helps you to be able to monitor your income and your expenses. That is a budget tool. It's an Excel spreadsheet that auto calculates the things that you need to be aware of, how much is coming in and your expenses, and you can monitor that over a long period. So that's my bonus for you today. If you want to download that, go on to bit.ly, that's bit.ly/Deji Mortgage 1. So the first bonus I gave was the credit report, which gives you multiple assets. That is on bit.ly, that's bit.ly/Deji Mortgage. The spreadsheet for you to monitor your income, to do a budget planning ahead of time, is to bit.ly/Dejinehan1. So go ahead, download that. If you need any help, I'm happy to help you. But don't forget, your income is a very important aspect of getting your mortgage, of getting the desired home, your dream home. And you need to plan ahead of that. I've told you what lenders will check, but when you plan, you'll put yourself in a better position. So if you have any question about your income, about your affordability, about how lenders will assess you, then let me know. I've just made this part 1 of the income. The other part, I would talk about how lenders use the different types of income in checking your affordability. So this is basically talking about what you need to cater for in terms of your income. The next one, I'll talk about what would be the difference for different types of income. Thank you very much. Hope that has been useful. Don't forget the bonus I'm giving you. So download those bonus and you can start planning for your mortgage success. Roadmap to mortgage success and getting the dream home. Thank you.